Okay, welcome back. It is Friday, the 18th of July. So I guess thanks for coming back. I guess just looking at the Group B dividends or distributions for YieldMax ETFs. Clearly, everybody already knows what they are. Just a quick reaction to them. You can see Morrow was quite good at over 10% monthly return. Annualized, that comes to over probably 120% based on the current share price or recent share price. We're right around just about 20 bucks a share. Then Murny's actually been pretty good from a percentage basis. Of course, the ETF has been obliterated into the $2 range, but since it hit the $2 range, it's actually been a pretty good performer, at least from a percentage basis. And I'm just looking at the Murny price right now. Looks like it's been in the 2 range since April. But since April, it's probably been a pretty good fund to own for people who didn't experience the downfall from inception until April of 2025. But that came in at 8.49%. NVDY was solid again at I'm going off the current share price as of today, which is right around high 16 range for NVDY. I'm just checking it right now. Yeah, 1688. So I got 1689. So it's 6% of that. Most who are holders should have the dividend coming their way probably tonight sometime. At least that's based on who your broker is. May vary from person to person. But those are the 3 standouts. Palantir was actually somewhat low relative to history at only $2.56 for almost $67 ETF. Yeah, I guess overall, I'm not entirely sure why that's so low. But then rounding out, everything else was GDX and BABO at under 3%, and then FBY and JPMO just slightly above 3%. Babo a little bit low too. So I'd say Babo and Palantir looked a little low. Morrow was by far the standout. But then I guess Group C is upcoming. I just want to take a look at Group C here quick. Got CONY. CONY's probably like the big one. I'm just looking at, I guess Group C now has got Robinhood, which has been stellar performer. Then you also got Coinbase. You can see Robinhood since inception, it came out at 50. And your total return with the cumulative dividend included is $86.51 or 73% return since May 7th of 2025. So HOOY or Robinhood's, they might go right in there in the top with the Misty, Coinbase, NVDY as one of the best performing, or probably one of the most held too, YieldMax ETFs based on its recent performance. So ours, I just think Group C, you got Hood, you got Coinbase, and then you got some of these other kind of average ones. But last month, Hood was the best, been followed by AMD and CONY, all above that 5% kind of threshold. So I'll be looking forward to those coming out. I think, I believe they might be throwing the DraftKings one in there as well. I'm just checking x.com for YieldMax and looking at their distribution next week. Looks like they are throwing D-Ray out there. But for those who don't know, D-Ray is the newest YieldMax single stock ETF. Came out at, I believe, I really haven't looked into it. It came out about 50. It's based on DraftKings. This one might be one I'll be looking to potentially get into at some point. But that will be added to Group C, which I think will make Group C even stronger. I think Group C's turned into one of my favorite groups actually to follow, particularly with the HOY edition and CONY as the base. But we'll look forward to that. As far as the rest of this video, I do got a detailed analysis of CONY, what it's holding right now, as well as NVIDIA or the NVDY. Just a quick update as far as the size of these funds. Misty, we're getting close to 6 billion. NVDY getting close to 2 billion. And then CONY looks like it just passed the 1.5 billion. And Tesla at 1.19 billion or 1.19 billion. And then PLTY is getting closer and closer to a billion. As far as other growers, let's see here. AMZY is somewhat large. I could see HOOY increasing over time. I guess I'll track it, but I see HOOY as being one that will potentially surpass some of the other ones here. That's a look at as far as fund size. Now, actually jumping into, let's see, I'll probably start with NVIDIA. For those who own the NVDY ticker, on my sheet here, you got historical metrics or performance metrics for the funds. You got the comparison, of course, between how the fund's doing based on different scenarios. If you reinvest dividends, if you don't reinvest dividends. So the red and the blue line are both YieldMax funds, assuming those 2 scenarios. And then the yellow line is just owning the stock straight up. So clearly the NVDA or NVIDIA ticker has been exceptional lately, and it is far outpacing the YieldMax funds. That said, I still like the YieldMax funds, just wanted to show that to people who wanted that perspective. And then as far as the distributions per share, You can say NVIDIA came back in at $1.02 or almost virtually $1.03. Not bad relative to past performance. Then NVDA, underlying stock ticker, has been on a tear, so it'd be interesting to see what it is next month as well. It's been going like 2 lower months, 1 big month, 2 lower months, 1 big month. I'm not sure if there's anything to that pattern lately, but just something I noticed. And then, yeah, just as far as how you're doing if you own this, green here is the cumulative dividend, and the blue is what the ETF price is. So as it goes up and down, the blue line or the blue bar varies. The cumulative dividend just keeps adding. It can never go down. Once you get a dividend, you keep it for life. So as you can see, the green line just keeps increasing, therefore bringing this fund to be a pretty good investment overall. And then for those who are interested in how it's doing right now, if you click the little in-depth button here, apologies, I think it's a little bit of allergies, but apologies for my voice. But so this will go into NVDY in depth. So what this does is it basically goes to the YieldMax website and pulls their positioning or what they actually hold. And I just did this today, so let me maybe zoom out a little bit so you can get the whole thing in. So here's what NVDY is holding currently. As I speak, the NVIDIA stock price is at 172.13. So that's also illustrated by this black dotted line. And then as far as what they own, they have a synthetic. They have 2 synthetics actually that are structured right now. They have one structured at 165 and one at 170. So you can see right now the total stock price is above both their synthetic options or where their synthetic positions are established. So those are both definitely positive and in the money. And then as far as what they have sold, you can see they got contracts expiring on the 18th as well as the 25th. The ones they have sold kind of fall below the zero line, and the ones they have bought for insurance purposes, I call it, or is the high part of the credit spread. When they sell a credit spread, they sell a call and also buy a call at a higher strike price, just to ensure that if the stock were to run greatly, that they don't miss out on all of the gains. So their synthetic position does not miss out on all those synthetic gains with being capped by the call they sold. So they basically get capped at the call they sell, but then once they hit the call that they buy, they're reaping gains again. So like a strategy, it is one that they're employing. And this is a look as far as what they're at. So you can see right now, they sold the 172.50. Looks like the price is just like right under it's at 172.10 right now. So it looks like pretty good. Those should both expire worthless here. We'll see how the market closes. And then as for next week, they got the 177.50 sold and the 180 sold. They got buys, or the credit spread kicks in again at 185 and 187.50. As far as how the fund is made up right now, here is it from a market cap perspective, but maybe easier to understand from a per share perspective. Let's see here. And NVDY is trading at, just pulling up the live data so I can reference something. So it's in the high 16s or 1688. The time I updated it is a 1691. So this is a few cents off, but overall makes the comparison easy to understand. So right now the fund it's at $16.31 in cash or cash equivalents. They have other contracts sold that impact the fund by -9 cents right now. And then their synthetic position is adding 70 cents to the fund's value. So I guess if you add those 3 bar charts together, you get the final price of $16.91. If the other contracts all expire worthless, it should add 9 cents to the price of the ETF, pushing it probably right up to that $17 range, assuming the synthetic were to stay the same. And then as far as their usage currently, and this might update once Friday comes to a close and their positions that they have sold expire and they open up new positions and such. But they got 110,000 contracts sold out and 110,640 contracts sold. They got approximately 57% or 63,490 contracts bought. So they got an insurance hedge at like 57% above the position. And they basically have all the contracts sold that they can based on what the size of their synthetics. So there's no kind of remaining capacity at the moment to sell more contracts. That said, once their contracts for 718 expire, I'm sure they're going to open up new positions, and I will update this chart accordingly. And then just a brief update just on how the fund's been doing. Shares outstanding continue to increase. Market cap of the fund continues to increase. As I said, I think it's getting close to getting close to that 1.9 billion. Let me just check the full graph. So NVDY is at, and these charts might be, I think this was updated yesterday. So this is 1.84 billion And I think my following chart here was at roughly the same amount. Might have been slightly different, but 1.86 billion. So it catches today's up as well. And then there's some other positions out here. If people are interested, I won't cover those. Let's really get into the depth of things. Maybe just a quick overview to look at the other contracts as a percentage of the total contracts they have sold. So for example, of all the contracts they have sold, 24, almost 25% are at the 175 strike price for the 7/18 expiration date. It's like kind of a positioning based on market cap. So here's the market value of the funds that they have sold. Clearly, since this one's about to expire worthless, it's not worth as much as these ones that are closer to the actual stock price today. And then I also have that on a per share metrics and a percentage of what the ETF price is as well. So maybe I'll get into those in future videos if you want to dive in depth to them. But that's just a summary. And then here's assuming the underlying stock price hits the underlying price, NVDA in this case, hits the strike price you have sold. This kind of shows you how much your synthetic would gain if it hit those prices. And then this is a hypothetical scenario of your synthetic value. I won't dive into those. I just got them in there mainly for me to look at. But the first few tabs I find somewhat useful for people that really want to understand what they're holding when they hold the NVDY YieldMax ETF. And then as a final thing, we got Coinbase coming up. Coinbase, despite its low ETF value, I think it's about 10, even though it opened at 20. The fund itself has performed very well. Mainly, if you look at the key reasons. So you see here, we got the price. I call it the price or the price of the ETF plus the cumulative distribution. So this fund initially came out at 20, and you can see it's currently sitting, I think it's above 10 now, or past the 10 point, but the actual ETF's down about 50%. However, the cumulative dividend's almost $30 a share. So therefore you can see, even though the Max ETF has declined 50%, your total return is, you took $20 basically to $40. So you're up about 100% if you include the total return. So CONY investment's been good for those who have owned it. As far as how they're sitting right now, I dive into so this is hooked to Tableau, and then Tableau provides the visuals, and then they can automatically update it. As YieldMax updates the information on their website, so I guess my data is only lagged by the YieldMax. So when the YieldMax updates their data on their website, then I can update my chart accordingly to show from an illustrative perspective what they're actually owning. But from a positional perspective, you can see Coinbase is right around the 415 price. So they have blown through a couple of the contracts that they've sold. So some of their synthetic gains are capped at 405 and 410 respectively. But the contracts they sold at, 415 and 420 may or may not expire worthless, kind of depending on how the market's closed. But looking into next week, they did go out. It looks like they went out a little bit further. They went to a 440, 445, and the most of the contracts sold are at the 450 strike. And then they did purchase some insurance at the 475 in case there was a further explosion higher. Coinbase has been on quite the ascent lately. Clearly, they do want to have some insurance out here just in case it really does shoot up. As far as the funds makeup, all these funds have predominantly most of their money in cash. And then they sell, or they use a little bit of money to establish a synthetic, or I guess they could establish a synthetic virtually with no money at all, which should trail what the actual stock will do if you own the stock shares directly. So the synthetic should mirror that without necessarily putting the funds up. We do have to have the funds or the cash and cash equivalents as collateral to set up that synthetic. So your cash here basically is the collateral one needs in order to set up the synthetic value, because you're basically buying a call and selling a put. So if the stock fell greatly, whoever is, or the portion of that trade where you're selling the put, you clearly got to have collateral in order, if someone were to exercise that put on, that you can come in and buy the stock at the put strike price that you sold. So I don't know if that makes sense, but that's your kind of synthetic makeup, is the cash, that's the collateral, and your synthetic. The synthetic could be open at virtually any amount, but as it goes up, as the stock price goes up, your synthetic should or the value of it should increase. So in this case, and I will jump into the per share metrics, looks the same, just on a per share basis. So you can see CONY right now is $10.31 a share. Of that, $9.85 is in cash and cash equivalents. They got a synthetic position that's worth 57 cents per share. And they got other contracts sold right now that are currently an 11-cent drag on the overall ETF value. I always like to say if all the contracts were to expire worthless, this negative 11 cents should go to 0 cents, which will therefore push up the ETF price by 11 cents. So that's what you're looking at from a premium of selling the calls, at least for this week. And then I'll see a synthetic usage risk. Right now they got 37,650 contracts sold. They only got insurance on 15% of their position, which I did show. Those are at I think they're the 475 strike, but they got everything sold out that they can. So the way they play the insurance varies from week to week. So this is something to watch, just as far as, are they banking on needing the insurance? Are they playing a little bit more conservative, not taking as much premium, but on the other hand, buying insurance contracts in case the underlying stock price takes off? But currently, 15% of their position is insured via the credit spread approach, rather than just selling the naked calls, using their synthetic as collateral. And then as far as how this position's done, Coinbase is another stock that's done very well lately, therefore boosting the market cap of CONY as well. And as far as shares outstanding, they were going up, and then recently they've been coming down. I don't know if that's some people liquidating out of CONY based on its recent performance, or I don't know, there's probably a variety of reasons why this could go up or down, but that's just a look at how it's been trending over time. Just to show that one more time, with the 7/18 expiration today, these blue lines will either be, I guess, maybe if they're in the money, they're going to be exercised and they'll cap the synthetic upside, or if they're above the current underlying strike price, they will expire worthless. Once they expire worthless, I'm sure next week the YieldMax team will reestablish their positions. At that time, I will update this chart, and I guess feel free to come back to it if you'd like. I will look to add this kind of detail for all of YieldMax positions with time. Misty will probably be next, as that's one of the most held funds. It is in Group D, so I'll probably hold that off till next week, or maybe later this week. Or I guess not later this week, as it is Friday, so definitely next week. But yeah, I guess there's an update of CONY and NVDY detailed analysis. Thanks for tuning in. I'll look to cover more next